Hello, everybody, and welcome back to the Dash Trader Newsroom. Is this a bear market rally? A new bottom? What's going on? And how do you deal with a rising interest rate environment? So let's just jump right in. My name is Michael DeGioia. I'm the Director of Educational Services and licensed professional here at Dash Trader. I'm joined by my co-host there at Nasdaq's Market Center, Jill Molongino. Jill, how you doing?
Good. Good to see you as always.
Good to have you back in New York City, right there in Times Square.
Right in Times Square.
All right. So this is our last opportunity to tell you about the registration for the next trader competition. This is our Novice Spring Trading Competition. The registration is still open. It starts on April 3rd and runs from April 4th all the way through to the 29th, which is 19 trading days. So the sooner you sign up, the more time you have to use the boot camp, which is basically the live simulator. So don't miss out. We have a code it's called News 10, which saves $10 at checkout. So Jill, this is one of your favorite times of year to do the newsroom.
It is. And with the risk of making everyone dizzy, I'm going to actually give them a quick tour of our studio upstairs because I believe the winner gets to come to Market Site, right, Mike?
Absolutely. That would be awesome. I can't wait to see it.
Let's see. We can all see. So what you see there is actually my set, and that's where CNBC Fast Money is going to be turning over their set for their show, which starts at 5. And then more of our folks on the desk here. It's where our markets intelligence desk sits, a number of our events and communications folks. So it really is a lot of fun to come here. And that's just one studio. Then we have the other one downstairs, which where the closing bell and all that, the fun stuff takes place. So looking forward to having the winner come back. It's always fun doing these competitions. And Mike, I think my favorite part is I love to see how they perform week to week, what stocks they're picking, and just the variation in terms of, I love it when you have someone who could have been down on the first couple of weeks and they just blast back in one day. So I always love to see what they're trading and how they're trading it.
Yep, and we've seen it go both ways. We've even seen it where people have been leading the competition week in and week out, and then they do some crazy gambling move.
Like last time.
Yeah, last time we had a complete turnover in the final week of trading, which was kind of crazy. And speaking of the Nasdaq market site, the winner gets their name displayed up in lights at the Nasdaq market site in Times Square. So for every trader, and I know I've been there a couple of times with you, Jill, every trader, if you're trading, you'd love to see your name up in lights. Everybody likes to get a little bit of kudos and accolades, and for a trader to get their name up on the Nasdaq market site in Times Square, that's really, really an awesome, congratulations for doing a great job in the competition. So looking forward to that starting very soon. So let's jump right in and talk a little bit about the news. We have the Federal Reserve raising interest rates last week by 25 basis points. It seems like at least from the indications, this past Monday, that Fed Chairman Jerome Powell seems to be indicating that it's quite possible that a 50 basis point hike might be in our near future come May. What are your thoughts on this? And what are your thoughts on, to me, that seems to say that there's really, as the market goes higher, the chances of us having smaller rate hikes seems to be less and less. And, the chances of a soft landing, I don't know. I'm a little bit incredulous at this point, but I'd love to hear your thoughts.
Yeah, it's interesting. Virtually everyone that I had on the show this week, the concern is around inflation, and if rate hikes are going to be enough to tamper it. We kind of have that perfect confluence where we're still dealing with supply chain issues from the pandemic, and then of course what's happening, especially in the commodity side with Russia, Ukraine. You have to remember the amount of energy and agriculture that they export, basically the breadbasket of Europe. It's just exasperating an already tight supply chain issue, and then of course between the price at the pump and then what you're paying for groceries and so forth, it really makes you start to question, okay, when is this going to start to impact GDP? We saw a couple of global estimates come down. We know 70% of consumer spend goes into US GDP. So it's really, there really is nothing else that the Fed can do but to tighten and do what they can in their toolbox to try and tamper inflation. Going into midterm election year, it's, whether or not the party in control has any control over inflation is anyone's guess, but it's going to certainly provide a lot of fireworks for midterm elections. So there's a lot going on in 2022, and I would say that it's not something that's going to be resolved this year. Most strategists I've spoken to say at least 2023, 2024, until we can get the supply chain back online, because again, we were doing so much catch up from the pandemic bottlenecks in the supply chain. So there's a confluence of the perfect storm there, and I think it's going to take a lot of work. I could tell you we have people starting to talk about the recession word right now. And Mike, to be honest with you, I was talking to a trader such as yourself last night, who's been doing this for a million years and has been through a number of market cycles, that we continue to throw money at situations. I heard that they might start to provide gas cards, and from a human perspective, I get it, but we also need to let the cycles play out and not continue to throw money at the situation, because we have to pay the piper at some point. And I think that could be part of the issue as well. We just print and print and print, and you can only print for so long.
I just saw a piece of news about, Gavin Newsom suggesting a $400 inflation payment in California. And you don't fight inflation with yet more inflation. It seems like there is a misguided approach that, as far as, I'm no expert in economics, but I did study it many, many years ago. And there seems to be one tried and true approach in terms of fighting inflation. And that is, tightening, rate hikes and tightening monetary policy and fiscal policy. And, it just seems like they have to raise rates. They are behind the 8 ball because they started way too late because of the pandemic and a myriad of other reasons. And I think you're right. You have to let market forces kind of play out at some point. So, it's kind of a perfect storm. And I have to agree with you there that, I'm personally concerned more about stagflation. Something that you and I probably never experienced really in our lifetime. I was alive in the 1970s, but I certainly don't remember it. But I learned about it, and stagflation is a real serious concern here. What are your thoughts about the S word, stagflation?
Back to our point that we were saying before, there is a business cycle. You have your peak, you have your trough, you have recession in growth, right? So you kind of have like those 4 categories there. And there's a reason why it naturally plays itself out. And it's just so interesting now, Mike, because the employment picture doesn't necessarily look or sound bad like recession, right? Employment numbers came out. We had the data yesterday. It was really good. People are making money and they're landing good jobs. If you're looking for a job right now, the market is kind of on your side. We've made money in the market, right? Certainly over the past 10 years for folks who own homes. You saw what happened to your real estate value. So there is money on the sidelines. There is money that's been made, and now we have cryptocurrency that people have made money in. So you have your stocks, you have your crypto, you have your home, you're making decent wages, depending on what industry you're in. So it doesn't feel like recession, and I think that's what's confusing to the psyche, not only of the average investor, but also to the market itself. It doesn't feel that bad, at least domestically anyway. And I think that's really where the disconnect is.
Yeah, I totally agree. I think it's a very confusing, frothy yet bubble-like environment. Yet in some ways, you're right, the underlying base, the foundation has generally moved up so much that you don't really feel some of the negative effects of what's going on. Or it hasn't really affected us yet, right? Like food prices have gone up, but everybody can still afford food. It's not terrible.
Well, it as anything else, Mike, it does disproportionately impact
Lower income people, right?
Lower income, and that sadly has always been the fallout, and probably will be again. I think what really is going to change the situation at the end of the day is demand destruction, because at some point you're going to say, no, I can't afford this trip, this flight, this hotel. I cannot afford to go to the movies. I'm going to make my food budget stretch. I'm not going to be able to drive to work every day if you have to. And I think it's going to take demand destruction more so than raising rates or waiting for the supply chain to clear itself up. Because again, it's the consumer that's going to feel the impact, and they have the ability to pivot quicker than the economy can. So I think really thinking about the demand side of the equation is the key there.
Yeah, and I would say that I think the impact is felt in the lower income area and for people who are on fixed incomes. Because in talking to my parents who are, retired and nearing 80 years old, if your income doesn't really increase, yet food is 25% more expensive, they change their decisions drastically.
Yeah. Plus they have medicines they have to pay for too, and you can't not take your medicine regimen. So you have to make decisions.
It's definitely impacting the elderly people a lot. And of course, people who have families and have, their income is not rising as quickly as this inflation, certainly. Next, we were just talking about inflation, and the other thing I think for the United States in general, and really the world, is the cost of fuel, and just the fluctuations in the price of fuel. I mean, we had $135 a barrel oil that dropped down to $110 a barrel oil. I hear reports that I don't know if they're fully accurate, but that the strategic reserve was used to reduce prices, and that there's less than a 30-day supply of the strategic oil reserve. These global supply chain problems, I hear about, rising COVID cases in China and factory closures yet again. So is this the end of globalization? That's the big question. I mean, what's happening here is, we've all gotten accustomed to globalization, which is, cheap stuff from China, inexpensive food, having food, full shelves at the supermarket, year round, having the ability to have good produce in the supermarket. The question is globalization finished?
I don't know if it's necessarily finished, but I think sometimes, Mike, you have to be careful for what you wish for. If you try to bring everything back on shore again, or if you only try to make purchases from, let's say, Western Europe, our allies, NATO countries, and so forth, it's going to be more expensive. And that's just the case. So if you're worried about inflation, you also have to think about what that is going to look like. I also think the word globalization, or the end of it, has a very poor social connotation as well. Mm-hmm. And I think we have to be really careful when we say the end of globalization from a social perspective. I certainly hope that's not the case.
I love to travel.
Well, but I mean, Mike, look at all of the efforts that we have made from, let's say, in the corporate world, at least, mm-hmm. with diversity and inclusion and equity efforts, right? So, and part of that is because we are global companies. So I just think it has a very negative connotation when we're done with globalization. I don't think that's the answer either. I think what's an interesting question is, if we have a severe food shortage, what happens with the GMO argument, right? We know how quickly food can be produced that way. You have to, how do you ethically, source that in your head, part of the pun?
Yeah, no, it definitely brings the supply chain to the forefront. And I don't think people really realized exactly where we get a lot of things. I know I've done a lot of research in where things come from, more so than I've ever looked into things in the last, 4 weeks. I don't think most people realize that, 25% of the grain and wheat came from Russia and the Ukraine, and/or fertilizer mostly came from from Russia and Belarus. And of course, we get our fertilizer a lot from Canada, the production of potash and things of that nature. So I think we're certainly much more aware of where things came from and where they're sourced, as well as nickel. I don't think anybody ever thought about where nickel came from until it got halted on the London, mercantile exchange. I mean, that was an interesting one as well. So I think that, let's just say that globalization certainly is not coming to an end, but it's getting a real serious look at globalization and where things are coming from, and people are much more aware of the global supply process, because I certainly did not realize where things came from until we started to have all these problems.
Yeah, I would agree with you too, especially when you think about the amount of metal that is imported, whether it's for steel, right? That impacts building costs, car costs, the metals, those special rare earth metals that are imported to build chips and for everything that's the Internet of Things. So it not only is a supply chain issue, but then it becomes an expense issue, and kind of back to the demand destruction thing. Again, I could tell you anecdotally, we were, because we just moved in our house last year, we were thinking about, a pool or upgrading the backyard from a landscape perspective. And we're not doing that this year. You're going to be paying 20, 30, 40% more just because of those issues. So it starts to, that trickles down a bit.
You start to make decisions.
And you and I have always, since day one of the transitory word, the biggest concern that we're hearing, actually had the National Kitchen and Bath Association on my show, the great insight for trends into this, because they're always dealing with supply chain, but it's labor. The issues that keep them up at night are labor costs, because not only can't they get the talent, not as many people want to get into physical labor jobs as they might have in the past. That's the issue. And then also paying for them. And as you and I have said, that's not transitory, even when supply chains get figured out.
Yep, you can't reduce somebody's salary so easy. I mean, you may have to fire them and hire a new person. My sister owns a restaurant in Florida, and you'd say, okay, well, she's had the best revenue year numbers for 2 years in a row, right? So Florida, we know, has gone through a tremendous boom. And, obviously we know restaurants really took it on the chin at the beginning of the pandemic. But the problem that she has now is 100% a workforce issue. It is keeping staff and finding good staff. It is very, very, the thing that keeps her up at night is staffing issues. People change jobs. They are not, there's a lot of job opportunities. The other big problem with a restaurant, and I feel bad for anybody in the restaurant industry, is they have literally changed their menu every single month since December. Is the cost of food. The price of food has increased so rapidly, they have to increase the prices on the menu. They've had to change the menu every single month. It is a moving target right now.
I also think that restaurant jobs, service jobs, a lot of times it will be younger generation, going to school. I mean, I worked every job you could think of when I was part-time in high school and college the first time around. And we have a younger generation that have grown up as digital natives. And the way that work is perceived are two very different things. I could tell you my stepson, right out of high school, he wanted to go into production school, wanted nothing to do. He wants to get into what he wants to do, boom, like that. And he's crushing it because they've just grown up in a very different way. And I think that could be part, of the issue as well. I think a lot of it's social too.
Social decision making and also just labor supply, right? I mean, there's just not as, if you have a choice to switch jobs, you're going to switch jobs if you can get more money somewhere else. And a restaurant job is, you can take your services as a waitress or a waiter or a bartender and go to another restaurant right down the street if it's possible. There's a lot of opportunities available. So there's
part of the issue too is you have to deal with the public.
Yeah, that's tough. And the pandemic, in the pandemic, there was a lot of angry public as well. So jump right in. Let's talk a little bit about the markets and how to deal with the markets. Many market technicians say that this stock market is a stock picker's market. I mean, we've had really almost 13 years of bull market. We have crossed 20% off the high. We've kind of bounced back quite a bit in the last week or so. the question is, what stocks do best with all these current problems? And there's so many problems happening at once. What's your opinion as the best way to deal with this market as a trader or as an investor?
I could speak more from the investor perspective because most of the folks that come on my show are going to have a longer term mindset, or that's what they're mandated to do. And if, just look at, we didn't have to talk about, what happened in the housing crisis. There's people who might be on this that didn't even trade through there. But even something as recent as, the March and April 2020 pandemic lows, and look how the market came soaring back. I mean, if you look at things on a longer term chart, and to your point before, we have this on demand, immediate expectation mentality, when longer term, these are kind of the ebbs and the flows and why we have averages, right? So staying invested, and, it makes you wonder too on this move that we saw in the past week. I mean, you have to think about managers. We're not paying them fees to sit in cash, right? So, you wonder if that could be some of the influx that you saw coming into the market. Now, as a trader, volatility, traders on volatility, they can get in and out all day. But I can tell you, because of the moves where you're, round tripping 1, 2, 3, 4% a day, it's incredibly hard to keep on anything overnight. I feel like a lot of it's actually been happening between like 4 and 8 a.m., which is interesting.
Yeah.
But you have to, it's hard to position trade, and you just have to be really diligent. These things are moving so fast, and you have to ask yourself, do I necessarily need to participate like every single tick? You know what I mean?
Yeah, absolutely. I think as a trader, I can say that we love volatility, but not having a position is often a position. If you don't take a position, if something isn't clear, the best thing you can do is sit on your hands and wait until an opportunity is clear. I mean, this latest reaction to the Fed, I mean, the clear that the direction was down going into that Fed announcement, and then the market was deeply oversold. And when the market's deeply oversold for 5 weeks, it's a lot more likely for it to have a bear market rally or make some kind of a rally that might have some substantial legs, but we have to wait and see if that's the case. Do your technical analysis, make sure that you stay on which sector is rotating in and out. Certainly commodities is a sector that seems like it's, on fire. I mean, you got all the fertilizer stocks doing very, very well. You have to really do your research and be much more attentive in a market that has a lot of volatility, and really be aware of the news and the different catalysts that are causing change. So from a trader's perspective, we love volatility, but certainly being in cash at times and being ready to spring when you see an opportunity that has high odds is the best way to deal with it, in my opinion. So on that note, Jill, I can't wait to see you during the competition. As things progress, I'm going to jump to the charts. I thank you so much. Have a great weekend. See you next time.
Take care.
Bye-bye now. All right, everybody. I'm just going to bring up my charts here. So here is my dash trader. I'm just going to bring up, we have the spiders really closing near the highs on the S&P. Here we have a strong rally up. This is pretty much from the Fed announcement that they were only raising a quarter of a basis point. We went, this was pretty much the day that we sold off. We rallied up. Looks like we're coming into this, this area of resistance. I'm just going to put in this horizontal line. This is the resistance level. It's at 456. Okay, so it's a significant area of resistance. This is the S&P. Let's take a look at the Qs. Qs have already broke the prior high, but on the Qs, the resistance level is a little bit different. It's right here, very close at 365 area. It took out a prior high. It took out another prior high. That's really, really good for the bulls. However, it is now getting to the point, and I'm going to bring up one of my other configurations. Okay, hold on one second. Let me just load my chart settings. I'm going to bring up the MACD here. So just to kind of give an impression, we are deeply overbought here on the QQQ. Let's bring it to the daily chart. So we are deeply overbought. We are also getting some, divergence as well between the CCI and on the MACD, although the MACD is still in an upswing. So certainly this is very good for the bulls short term, but we are coming into kind of a long-term resistance level in this area. So you can see there's some area of support here. Support is now resistance. We have an area of congestion right here. So I would certainly take heed and be aware that this is an area where we can get a sharp reversal back to the downside at any time. Now, from that point, whether we go up, down, we are certainly in a nice upswing. We've had 1, 2, 3, 4, 5, 6, 7, 8 up days. We've had a nice swing to the upside, and let's just see how long it continues. But I would certainly be taking some profits and taking some money off the table if if that is the case. See if this continues or not. Let's see the DIA. This is the Dow Jones Industrial Average. The Dow Jones Industrial Average really is the one that's most bearish now. So the rally is being led by technology. And the S&P is somewhat in the middle, but the Dow is the one that's showing the least strength at this point, which is a little strange. Let's take a look at the IWM, which is the Russell 2000. Russell 2000, had a strong bounce today, still above many of its moving averages, but it is also kind of swinging down from the deeply overbought area. So let's take a look at Apple. Apple breaking out to the upside, really making a strong move to the upside. Up now for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Very, very strong move to the upside on Apple. Let's take a look at Tesla. Tesla not really doing much compared to yesterday. Kind of a quiet day for Tesla. Looks like it's deeply overbought. MSFT. Microsoft having a really strong day like Apple. Let's see some of the old economy stocks like US Steel. Now, this is a commodity, commodities type orientated company. So US Steel really having a strong move. FCX having a strong move. FCX clearly in an uptrend, not in a bear market at all. So these kind of miners, GOLD, gold, right? So gold is a gold miner, Rand Gold Corporation, I believe it is. You could look at some of the gold ETFs, GOLD, gold ETF looking like it's breaking out to the upside as well. You got silver, SLV. Certainly anything related to commodities has done well. Silver had a strong day, but it kind of gave some of it back. Of course, we have the oil ETF or ETN pulling back a little bit, but it made a high and then a somewhat lower high and started to pull back a little bit. UNG, which is natural gas, something we very rarely talk about here. Certainly in an uptrend. This has a lot to do with the Russia-Ukraine war. UNG certainly now back in an uptrend and really reaching prices it hasn't seen since October. I mean, really, we have not seen natural gas on the move like this for some time. GBTC, certainly Bitcoin, which trades somewhat like a technology stock. Bitcoin having a strong bar to the upside, maybe forming a little bit of a bottom here on Bitcoin. ETHE, Ethereum also making a nice run to the upside, forming a little bit of a coming near to some resistance here on Ethereum on the ETHE, which is the Ethereum tracking ETF. All right, so that pretty much covers the charts. Let's jump back to my slides. All right, stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to all of our YouTube channels. That's DAS Trader TV and the DAS Newsroom. Get our reminders as well by clicking on the bell. follow us on social media at Dash Trader. That is on LinkedIn, Twitter, Facebook, and Instagram. And until next time, everybody, that is all for today and the Dash Trader Newsroom. See you next time. Bye-bye, everybody.